Pretty darn competitive out here. Expect to put out a lot of offers.
They wouldn't be upside down. They also wouldn't make any money.
We've all had it done. They've lost a lot of money to bad people.
It puts flippers out of business.
What is something that out-of-state investors or just like people who aren't local to Indianapolis should know about the Indianapolis real estate, whether it's flipping, I know you have a background in that, whether it's hiring a contractor, buying properties?
A lot of potential here, as you know, obviously everyone knows, but I mean, it's just pretty competitive. You know, it's pretty darn competitive out here. Expect to put out a lot of offers. Obviously it's important who you're working with. It's just so easy to have people run off on you. We've all had it done. They've lost a lot of money to bad people. But I mean, I just had a client that was from out of country that I met 2 days ago, and they were kind of getting their lay of the land, things like that. So I was giving them resources, telling them to go places. I told them to go to the One America building up in the Skyline Lounge. I was like, go up there and get a look at that city, Yeah. But yeah, it's just, I mean, I do you guys agree? I mean, do you still think there's a disconnect from seller prices and buyers' expectations? Do you think that gap is going to close it all? Because Tyler Rickey, love him. He crushes it and puts houses on contract, but I'm sitting here sometimes looking at 20-something houses, putting out 20 offers, and, it's tough to get. And it's always that margin that you need for your flip to work. That's the deal breaker, right? Mm-hmm.
Well, I think when sellers put like a distressed property on the market, they're almost willing to discount it to the point where it's like if somebody bought this property and they maybe DIY'd renovations or even hired contractors to do all the renovations, they wouldn't be upside down. But they also wouldn't make any money. Like they're not gonna. So I think that would be consistent with your point that it's that margin that you need to make a flip worth all of the effort that is often missing at whatever that distressed property purchase price is. What you said is like that disconnect between seller pricing and buyer pricing. I think of it less as a disconnect between seller pricing and buyer pricing, and more of a disconnect between buyers, like disconnect between like one buyer's pricing and another buyer's pricing. Because like I mentioned that example of like the owner occupant who's like, there's still plenty of people and inventory is still low enough where it's just like, I just want to find a house I can afford. Yeah. And so they're just like, if they find a house that they can afford, even if it needs some work, it's like, all right, let's do it.
I agree. That's a great thing for them. Yeah. I think the disconnect of buyers would be flippers and investors potentially.
Or flippers and owner occupants or flippers and buy and hold investors. Like, so even the different types of investors, because that's I think maybe the biggest driver of the pricing that's happening on distressed assets right now is you've got out-of-state investors that they don't plan to flip it. So they're doing their underwriting completely differently. They're just like, okay, I could get this asset. I can maybe I add some value. I do some renovation. I rent it out. I cash flow. Beautiful. Let's move on to the next one. Yeah. And they don't care about leaving money.
And they might get a little extra equity while they're at it.
Exactly. They view that as whipped cream on top of the sundae.
I agree. Yeah.
So that kind of, it puts flippers out of business a little bit, because then flippers are like, well, then if they're willing to pay $100K for that property, then the seller's not going to take my offer for 80.
Yeah. And back to your point about, what to know about the city, obviously highly competitive, but like what a great place to be, right? Like all the markets we're in, I'm born and raised here in Indianapolis. Like this is pretty cool. So there's a ton of obviously opportunity. Just, you got to sharpen your teeth and get in there, get messy, and always, network and get to know people, and don't just take someone's, recommendation for someone. I had that. Like one of the guys that took a lot of money from me, he was referred to me from a big multifamily developer. And he was like, yeah, he did great for me, did a great job. And then he just robbed me blind right after. So it's like, but what did I do? I only took one reference, So it's like your due diligence is just so important. It might sound, obvious, to us now. Yeah. But, when people are excited, they want to run and gun with things, you just got to take your time. I think that's,
that like, you said that was like a sub that you worked with, or like
it was when I was flipping, I hired him. Yeah.
Hired him as a contractor. Yeah. Yeah. And I think what we do with contractors is we like to try to start them small. You can check out our full library of episodes wherever you get your podcasts.